So what does this actually mean for electric car companies, specifically Tesla?
Yeah, I mean, this is going to kick off what we believe is a green tidal wave. In terms of the whole ecosystem, I think in terms of Tesla and GM, the reason it's important is I think part of it is they're going to lift the ceiling on the 200,000, where now you'll start to see tax credits restored for Tesla and GM. And we believe, based on all of our checks in the Beltway, that the 7,500 goes to 10,000 or potentially more. And that's why right now, this is the start of what I believe is a $5 trillion market, with definitely Biden kicking off the green tidal wave in the U.S., which has underperformed when we look compared to China and Europe.
But why this reaction in the shares today? They popped a bit midday, closing down, though, about 1%. Why did investors react that way?
I think this was a bit sort of buying rumors, selling the news. But if I look out, I think EV stocks are up 30 to 40% from these levels. Because what we're seeing in China, you saw with Neo Xpeng, and I believe we'll see it in Tesla over the coming days, is around China's continue to see skyrocketing growth. For Tesla, that could be 40% of sales. And then you combine that with what we're seeing in Europe across the board, and of course now in the US, I think this is just a start. Even though a lot of blooms come off the roads for the stocks, I believe that's near term. And I think all the good news starts as we see more deliveries and numbers over the coming weeks.
Dan, you cover Uber as well, and I'm curious what trends you see post-pandemic for car ownership, car purchases versus ride sharing.
Yeah, I think for now, especially as on a reopening play, that names like Uber and Lyft continue to be front and center, even despite some of the headwinds that Uber's seeing in the UK. But no doubt from a ride sharing, I think we're seeing a share shift. You're seeing more and more, especially in urban areas, as there's an urban migration. That's a benefit for names like Uber, especially where they play. But when we look at car ownership, I think we'll see auto sales spike over the coming year in terms of the reopening. But it's important that we're going to see a transformation on EV. Today, 2% of automobiles in the US are EV. When that goes to 10% next 4 to 5 years, which is why right now it's just the start of a massive ecosystem really being built out on the auto front.
What about tech more broadly? Are big cap tech stocks really reopening plays, or has the incredible rise that they have seen over the last year, are we going to see that start to change?
You know, I think this sell-off's been overdone. I know we've talked about it. In our opinion, in terms of the reopening, take a step back. A digital transformation in terms of the shift to the cloud, talking about $2 trillion over the next decade. Amazon, Microsoft, Google, and really across the whole ecosystem with cybersecurity and some of these others. There's poster childs like Zoom that will see moderated growth. But I think we're going into a golden age for tech in terms of where we're going to see spend. And I think what we're going to see over the coming 3 to 4 weeks, tech's going to rally significantly in terms of earnings. We think across the board are going to be beat and raise specials. And I think that starts what we believe is a rally to a NASDAQ 16,000.
Does regulation concern you? We just saw the CEOs of Alphabet, Facebook, Twitter testify on Capitol Hill, and we know that more scrutiny is coming.
It definitely is in terms of big tech versus Beltway, especially on Section 230, but just broader on antitrust. We're seeing those swirls not just in the Beltway, but also in the EU and Brussels. I think for now it's a contained risk. No doubt this is going to be a long sort of 12-round battle, but I think the biggest risk for tech continues to be China. The U.S.-China cold tech war right now, I think it's a bigger risk on tech stocks. We think about 10% risk right now, a discount to tech, given the view that Biden was going to be softer on China. As we've seen, it's sort of been the opposite. So that's really going to be a fork in the road situation over the coming months.
So talk to us about some of your other more unsung tech reopening plays. You highlight in your notes Okta, DocuSign, CrowdStrike. Talk about some of the names we don't talk about as often that you think will surprise us.
I think on healthcare, there's a name like Nuance. I mean, more and more we're going to see healthcare spending increased amounts on cloud. I look where Nuance are a pure play on healthcare. I love that name sort of front and center. That could be a re-rating stock, ultimately $60, $70. Another name I like on the reopening is Cerence. which is an auto play. This really directly benefits in terms of what we see. And I think that's a name they're going to be more and more driven internationally in terms of that being almost an auto cloud play. So love those two sort of front and center. And then I think some other names on the cybersecurity side, hybrid environments, 30 to 40% working from home potentially. You're going to see names like SailPoint, Varonis on the cybersecurity side. I think get another big lift as we're starting to see out in the market.
All right. So where do you think we end 2021?
NASDAQ, I think the ball drops in Times Square. NASDAQ 16,000. I think tech stocks rally 30% from here. And it's my view, this has sort of been a golden buying opportunity. And then I get the whole rotation trade, 50 bit move in the 10-year doesn't change the multi-year bullish view on EV as well as tech in terms of where we're seeing it. So I think this is going to start to play out over the coming weeks with numbers that I think will really surprise the street on the upside.